Welcome to the deep dive. So today we're looking at some material you sent in from Mansi Suryawanshi. It's about a trading strategy specifically for the Indian market, the NSE, using Bollinger Bands and ADX.
That's right. And our mission really is to unpack this, see how these tools are supposed to work together to tackle, the specific conditions you find on the National Stock Exchange.
Okay, so let's start with Bollinger Bands. What's the core idea there for the NSE?
Well, think of a standard 20-day moving average. The Bollinger Bands are plotted two standard deviations above and below that average, so they kind of create this envelope around the price.
Right, showing typical volatility range.
Exactly. When price hits those outer bands on, say, an NSE stock or index, it might suggest things were getting a bit stretched, maybe overbought or oversold in the short term.
Okay, and the other piece is the ADX, the average directional index. What
Yeah.
role does that play?
ADX is all about trend strength. It gives you a number 0 to 100. Generally, if the ADX is reading above 25, it suggests there's a decent trend going on, could be up or down.
And below 20?
Below 20 often means the market's kind of directionless, maybe choppy or just moving sideways. It also has these plus DI and my DI lines that help indicate whether the bulls or bears have the upper hand within that trend.
Got it. So the first big rule from Mansi seems to be use the ADX as a filter. Only even consider trend-following trades if that ADX is showing strength. So above 25.
Yeah, that's crucial. It's about trying to avoid getting whipsawed in non-trending, choppy NSE conditions. Use it on daily charts, maybe hourly charts for specific stocks like Reliance or Infosys or Nifty futures.
And she mentions checking the Nifty 50 ADX too, as a
Ah,
broader market check.
absolutely. A really smart point for the NSE. You want the overall market tide kind of lifting your boat, right? Or at least not fighting against it too hard.
Makes sense. Okay, so ADX is strong, above 25. What about getting into a trade? Let's talk breakouts.
Right. So for a long breakout betting on price going up, you're looking for the price to actually close above the upper Bollinger Band.
Yeah.
But only if ADX is over 25 and the plus DI is greater than the tiny I.
So multiple conditions have to line up.
Exactly. And for a short, it's the reverse. Price closes below the lower band, ADX is strong, above 25, but this time the ADI needs to be above the plus DI, signaling downside momentum.
And risk management, stop losses.
Standard advice is below the middle band, that 20-period SMA for longs and above it for shorts, but Mansi also suggests maybe using something like 1.5 times the average true range, the ATR, for the stop given NSC volatility.
ATR gives you a volatility-adjusted stop.
Okay.
Take profits.
Look at key NSE support or resistance levels, maybe nifty pivot points, or you could trail your stop, maybe using that middle Bollinger Band as a guide.
And a specific NSE tip was about volume and news.
Yeah, stick to liquid stocks or nifty futures to avoid bad fills, slippage, and just be really careful around big news events or earnings reports on the NSEs. Things can get wild fast.
Okay, that covers breakouts. What if there's already a strong trend, ADX 25, but the price just pulls back temporarily?
Pullback trades. So the trend is confirmed, right? If it's an uptrend, plus DI, you wait for the price to dip back to the middle Bollinger Band, that SMA line.
Acting as potential support.
Exactly. You'd look for maybe a bullish candle pattern there, suggesting buyers are stepping in, and then you'd enter long. In a downtrend, DI plus DI, you look for a bounce up to the middle band and a bearish candle to enter short.
Stop loss for pullbacks.
Below the lower band for longs, above the upper band for shorts, gives it a bit more room than the breakout stops. Profit targets could be the opposite outer band, or again, trailing stops perhaps based on ATR.
And these work well in trending NSE stocks, like, say, TCS during a good run.
Potentially, yeah. Mansi notes checking for volume spikes on these pullbacks can add some confirmation.
Right. Now, what about the opposite scenario? ADX is weak, like below 20, no trend.
Okay, then the strategy flips. Instead of trend following, you look for reversals off the outer bands. The idea is, with no strong trend, a push to the outer bands might just be an overextension that snaps back.
So fading the move.
Sort of. If price touches or dips below the lower band and ADX is weak, 20, look for a bullish reversal candle, like a hammer maybe, to go long. Target the middle band.
And shorts.
Price touches or pops above the upper band, ADX 20, look for a bearish pattern, like a shooting star, to go short. Again, target the middle band, maybe even the opposite band if the range is wide enough. Stop loss goes just outside the band you entered near.
This works better in, like, stable, less volatile NSE stocks.
Generally, yes. Think HUL or Asian paints perhaps during calmer periods. Probably avoid illiquid stocks here.
Okay, this feels quite comprehensive. It also mentions when to just sit out.
Definitely. Avoid trading if the ADX is stuck between 20 and 25. That's often an indecisive zone. Also, if the Bollinger bands themselves get really narrow, like squeezing together.
Low volatility. Consolidation, maybe.
Exactly. Low vol often precedes a bigger move, but you don't know which way yet. Also, if ADX is below 25 and flat or falling, the previous trend might be fizzling out. Best to wait for clarity. Checking the India VIX, the NSE's fear gauge, can help gauge the environment too.
Right. Finally, getting out of a trade. What are the key exit signals?
Well, if you're in a trend trade and the ADX falls back below 25, that's a warning the trend might be ending. Or if the price, after being outside the bands, closes back inside them.
Trend momentum fading.
Yep. Or your plus DIDI lines could cross against your position. And of course, trailing stops based on the middle band or ATR. For range trades, you're usually exiting at the middle band or the opposite band.
And there was a crucial timing point for the NSE.
Yes, very important. Be really mindful of the 3:30 p.m. IST market close. Intraday trades maybe aim to square them off by 3:15 p.m. to avoid any end-of-day volatility or liquidity issues.
Okay, so summing it up, this strategy is really about combining Bollinger Bands for volatility context with ADX for trend strength, specifically tuned for NSE conditions.
Mhm.
It gives rules for breakouts, pullbacks, and range reversals, but also stresses patience and clear exits.
It's a structured approach. Which leads to a final thought for you listening. This strategy uses price and these specific indicators. But how might adding volume analysis looking at how much is being traded on the NSE potentially refine these signals further? Could it help confirm breakouts or warn you about weak moves? Something to chew on.